All right, welcome back to this week's breakout watch list from November 21st to the 25th. Now remember, we do have Thanksgiving on Thursday where the market's going to be closed, but it'll be reopened on Friday. In this video, we'll be covering the top 10 setups going into next week. Each of these stocks either have strong fundamentals, strong technicals, or volume patterns that lead into uptrends. And this video is sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down each of the setups. Here are the 10 trade ideas that we'll be going over in today's video. Now these are all from the long side, but I am watching a couple short setups that I'll drop in the comment section. And please do me a favor, if you found an A+ setup over the weekend that isn't on this list, drop it in the comments so I'm as prepared as you are. Now we're in MarketSmith breaking down the first stock, AMGN. This is a biotech stock, which is the 16th strongest group out of 197. We always want to look for the strongest stocks in the strongest groups to improve our trade probability. So this has an A+ group strength rating, A- accumulation distribution, meaning many of the heavy volume days come on up days, the low volume days typically come on pullback days, and that's the volume pattern that we want to see where the stock's being accumulated by institutional investors. Overall, composite rating 94, individual relative strength rating 95. Anytime you have a stock with 90s in both of those categories, it's a stock that I want to have on at least my general watch list, not maybe my focus list, but in the world of stocks that I'm monitoring. This stock has had not one, not two, but three unfilled gaps on the way up. That shows the sign of strength there. And a lot of the heavy volume days, along with that accumulation rating, have been on up days. More recently, we've had a pullback to this 280 area, undercutting the 8-day EMA. That's this green line here. But the past 2 days, really tight price action, closing flat on Friday, 0% move. But what I'm looking for is going to be a break over Friday's high, 288.74 as a potential entry point for AMGN. Next, we're sticking with the biotech theme with ATNM. This one doesn't have the fundamentals that AMGN had. It's a little less liquid as well. So very much more a technical setup than fundamentals, but really nice volume as we push out into previous highs here, up through $14, all the way to $15.12. From then, we had a pretty steep pullback here down to $10.50. What I really want to look at is we'll go with a 30-minute chart on here. We did have that pullback down to $10.50. We respected $10.50 though. The low was $10.52. So it's nice to see that area get the bounce. From then, you could just see how this is tightening after a couple of shakeouts under 11.5. Really nice action on Friday. And what we can do here is just draw a downtrend line that touches not once, not twice, but 3 times. So we're just looking for a break over the second half of the day's high, right around 12.11 as a potential entry point for ATNM. The next stock that we have is CAR, and if that sounds familiar, it's because it's been on the breakout watch list for the last 2 weeks, but it's not really doing anything wrong. Thursday, Friday kind of pulled back. Lows of days bounced right at the 21 EMA, and now we're getting a lower risk entry point because we can keep our stop under the 21 EMA. Under 220 is where I would kind of keep my stop loss. But look for an entry price breaking above 230. The high of the day on Friday was 230.75. That's another potential entry point. But kind of stepping back, this stock, CAR, Avis Budget, is in leisure service, 80th strongest group out of 197. Really strong fundamentals, earnings growth, sales growth, after-tax profit margin improvements for the last 4 quarters. And then most recently, what got this on the watch list was this break over the 200-day moving average on above average volume, closing in the 96th percentile of the daily range. And then from then on, just kind of traded sideways. We're seeing nice tight price action the last 2 days, respecting that 21 EMA. So this is CAR, another time on the breakout watch list. The next stock we'll cover is HDSN. This is in pollution control, which is the 65th strongest group out of 197. This was on my watch list back in August when it had this potential breakout on the 25th, went into new highs, but then immediately failed, undercut the breakout point. And in a bear market, you know that's just time to get out. Take the small loss because it went from 11.16 all the way down to 6.62, undercutting the low of the previous pullback here, which is actually nice as long as you weren't holding on to it the entire time. This undercut shakes out the weaker hands. It did get supported right around the 200-day moving average, which is exactly what you want to see. Since then, has a nice move up to brand new highs. And what I want to point out here is volume is drying up as the stock is just pulling right back into that 8-day EMA. Exactly what you want to see here. It wouldn't be the worst thing is if this continued to pull in, allowing that 21 EMA to catch up to $10, and we have a round number to kind of support the price action again, get a stop loss under that. So if this trades down for the next week, not the worst case scenario. Similar to CAR, we'll probably see this on the breakout watch list next week then. But what I'm looking for is a break over Friday's high, 1076 as a potential entry point. Next we have HLX, and this is one of 2 oil and gas stocks that I'm watching. And actually currently I do have a position in HLX, so full disclosure there. Looking to add to it if we see confirmation to the upside. Oil and gas as a group, let's just go XLE for the energy. You can see it had a pullback on Friday to the 21 EMA, but closed right at the high of the day. So after a little bit of shakeout around the previous highs, you typically see that turbulence in a bear market. It looks like it has that potential to now press higher. So that's what the group is doing. The individual stock, HLX, has had a really nice move from 250 up to 718. After really the breakout was from like 470 up to 718. From there, just pulling back to the 8-day EMA, lighter than average volume, checking all the boxes there. I entered this on an oops reversal on Thursday as it gapped down. Everything gapped down on Thursday. We had the stress test in the market, but then came back through the previous lows in the flag here. So I got in around 661 as it was confirming to the upside. Closed really nice on Thursday, but had another gap down on Friday, but still closed in the upper half of the range, 77th percentile there. What I would be looking for is a break over Thursday's high, 680 as a potential entry point to the upside, or potential add spot for myself, with HLX. So everyone is talking about Celsius, but the stock Monster is actually shaping up a little bit better for me. I want to go to a weekly chart on this one first. You can see the left shoulder, the head, the right shoulder above the left shoulder's low, so an inverse head and shoulders forming, and a nice clean pivot around a psychological level of $100. But it wouldn't be the first time that we break that. So in bear markets, we typically don't want to be buying the break into brand new highs for the first time over a psychological level, because that kind of rings the bells of this is where liquidity is going to be coming into the name. And you can see from there, we did have a pullback to the 8-day EMA, but it was nice and orderly, not a very violent shakeout. And from then on, we just traded sideways, closed right near the high of the day on Friday, right by $100. So now that this is the second time going through that psychological level, I will be looking for an entry point right around $100 for Monster. The next stock that we'll cover makes me want to sing their company jingle, but I don't know if I can do that without getting a copyright strike, and you guys don't want to hear me sing. So we'll just go into the chart. This is O'Reilly Automotive, third strongest group out of 197, A+ group strength rating, 93 earnings per share rating, A- accumulation distribution, 97 composite, 95 individual relative strength, earnings growing, sales growing, after-tax profit margins improving. Really checking all the boxes here. Within the eight stocks that make up that group, this is ranked number 1 on a composite basis, and it's trading above all the key moving averages. Everything that you could want from a stock. And from there, had a really nice move, a gap up, unfilled gap, showing the power in the stock, and then traded sideways. We haven't had an attempt on the 21 EMA to the downside yet. So similar to HDSN, like if this just trades sideways or down a little bit this week, then maybe we can put this on the watch list for next week and it'll be even better setup. But what I'm looking at is a break over Wednesday's high, 841.84 on this as a potential entry point, and then a stop loss just under the low of Friday. But we'll see how the first half of the week plays out. Maybe we can get even a lower risk entry point on this, or it'll be something that we talk about next week. ORLY, O'Reilly. The next stock that we'll talk about is Steel Dynamics, and I don't know if this was on the breakout watch list last week, but it was the stock that I picked for a Twitter space. And for now, it's holding up really well. Steel stocks moved up drastically and then kind of fell back, so their group rating has been all over the place. But the stock went over that psychological level of $100 a couple times last week, pulled back, had a shakeout on Thursday, but you could see the bearish engulfing candle closing right near the high of the day. Really nice action. And then basically an inside candle on Friday, slightly higher highs, but did close over that psychological 100 level as well. I'm looking just for a break over Friday's high, 101.20, or if we pull in, or if we gap down to start the day, just taking out 100, that would be a potential entry point, and then keeping that stop under the low of Friday. A couple other steel stocks to work on are RS and NUE, just giving you a couple other names in that group to show that the group is setting up for STLD. We got 2 more stocks to cover. This one is TMDX. Now this one does trade a little bit lighter, about 400,000 shares a day. So if you have liquidity issues or restraints, just pass on this stock. But medical products, 51 out of 197, A- accumulation distribution, 86 composite, 99 individual relative strength, trading above all the key moving averages with a nice unfilled gap to show that power. This is a stock that I did try to trade on Thursday as we gapped down. It came into $55, a nice round number, and actually found support there. So it was working out for a little bit, but then broke under 55, and I didn't want to hold any losing trades overnight, so I just cut the position. And of course, on Friday, it made higher highs, higher lows, closed up 3.7%. But this is something that, because I just took a very small loss on it, I can always come back and trade it again. I want to see on the way up, just breaking over Friday's high, 57.87, or if the market gaps down on Monday or Tuesday, do we hold 55 on the downside, a nice round number of potential support, or do we come down to Thursday's low, which was 54.23 for TMDX. The last stock that we'll cover in the second oil and gas name is WFRD. This is an oil and gas machinery, which is the 27th strongest group out of 197. Has an A+ accumulation distribution, 96 composite, 98 relative strength rating, and has been really acting better than a couple of the other oil and gas names that I'm watching. The price action has been extremely tight over the last week, where we did see some gap downs, just like with HLX. This did not experience that. Very tight price action. And you can, let's go to a 30-minute chart. You can just see how tight this is acting. There has been a couple shakeouts, but what we're looking for is just a break over 43.38 as a potential entry point there, with a stop loss under 41.47. And that's going to be the breakout watch list for the upcoming week. If you guys enjoyed the video, please do me a huge favor and leave a like and subscribe to my channel. I make this breakout watch list video every weekend along with other trading related videos. A big thanks to MarketSmith for sponsoring the video. MarketSmith was the trading research platform that we were using to break down each of the setups. So if you guys enjoyed the platform and want to give it a try yourself, there's a link in the description below. And finally, if you want to hear more from me throughout the week, you can follow me on the other social media sites. I'm at Nick Drendel on Twitter and at Nick_Drendel on everything else. Have a great week, and I'll see you guys in the next video.